you're going to have um, just potentially more audits and all that going on. But I don't want you to have a fear mongering title.
My thing is, why are we spending so much money on new IRS auditors or whatever? And then all this, so much stuff we could spend money on.
I mean, yeah, part of it is that man, there's a lot of money being spent with the Inflation Reduction Act. Is
Mhm.
just then, and it's always the politics. Like we're spending all this money, not so much for IRS, but all these other things, infrastructure, so forth and so forth. How are we going to make that money back? Like, well, if you pay the IRS more money and double up uh, their resources, then they can turn around and try to catch more people who have been fraudulently not reporting all their income, overstating expenses, doing things they shouldn't be doing. So, I mean, a lot of people kind of see it as just a attack to the small businesses and um, the middle class. And like I said, I mean, like a better term, I guess you can use the word attack. I mean, it's pretty aggressive, but like I said, they're trying to find ways to just recoup a lot of the money that's been issued out over the past couple of years with the CARES Act and everything that's going on with COVID,
Uh-huh.
um, as well as how to basically pay back this all these other benefits and stuff. Because a lot of it really is um, there's a lot of energy credits, a lot of stuff into uh, the energy field per se, like reusable resources, renewable energy.
Mhm.
There's a lot of credits and stuff associated with it. So there's some positives. It's just tough to see. The funny thing is like when we kind of talk to other geek CPAs like myself, is like we don't really see the 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 inflation reduction aspect to it because it has a bit of a trickle down effect. Like if you're going to be going after business owners, it's like okay, are they going to pass that cost on to their customers? So that's
So
one
Inflation Reduction Act means basically we pay more taxes. Is that what we're saying?
thing. I won't say pay more in taxes. It's so when we first like the first recording we did, the first live that we did, one of the things that if the three most important things when it comes to taxes is documentation, documentation,
I know
documentation,
that.
and when those three things fail, document documentation, because especially as real estate investors, because you're doing something that the IRS really isn't used to a lot of people doing. Like you're talking about really, I mean, 1% if that of like just kind of think of everyone that's on your live, like if just kind of targeted um to
Real
just Hampton
estate people.
Roads, like how
Yeah.
many people are actually doing real estate investing seriously.
Mm-hmm.
When I went to your property the other weekend and you had a little like was going to show people like run the numbers and show the deal that you were
That's right.
disclosing on,
Mm-hmm.
it was just you, your daughter,
Yeah.
me, and my son. And I'm pretty sure if they could drive, they probably wouldn't have been there.
Yeah, you're probably right. It's been
So
you
it
and
would
me.
have just been me and you at that point.
That's
So,
terrible, man.
but so it's like okay, you're in this thing that IRS really not used to a lot of people doing, but a lot of people can kind of abuse it from that standpoint. So okay,
I see.
are you then protecting yourself by having the proper documentation in place, like the whole adage, like pigs get fed, hogs get slaughtered, like being reasonable with certain deductions and taking advantage of stuff like that.
Yeah. But round up greetings to you today. It is a beautiful day as we head into the fall. It is my honor, it is a privilege, it is my duty, my job, obligation, my commitment to electrify you and help to raise your financial literacy through real estate investing and entrepreneurship. And Larry and I weekly come on here to just share with you how to minimize your biggest expense, in my opinion. Well, Larry, is taxes everybody's biggest expense, or is there another one bigger than that?
most likely like, it's going to be taxes because people just think of it as just your income tax. But then it's like, okay, it's your income tax, it's your federal and state income taxes, sales taxes, like taxes
Real
as
estate
a whole,
taxes, city
real
tax. I
estate,
gotta pay city tax.
personal property taxes.
Oh God, I feel like I'm financing everything, dog.
So it's one of the things is like it is your largest expense because it affects literally almost every aspect, whether you're a business owner, real estate investor, just a
It's even worse if you're an
W2.
employee in it. Sure, they take it right out of your check.
Yeah, like well, it's worse if you're self-employed and operating as such
Good
because
Lord.
one, like you're trying to report all like you're trying to claim all the deductions and report income, but you have this catch 22 of like you try and show profitability to a lender if you're trying to get business financing and then turn around having to show all this income and you're hit with your tax rate and an additional 15.3% taxes for your self-employment
Uh-huh.
aspect of it. So it's so like, and I know we went over that a couple of weeks ago, like when to do S corps and all of that. Um, but like that's when you go from just being self-employed to more of a operating as a big business at that point.
Yeah. So Larry wanted to come on here and inform you. Missy had to come up here today, y'all. So say hello, everybody. Say hello to Missy. She's in the building today. She will be signing autographs at 4 p.m. later today. So Larry wanted to talk to y'all about this new law change and Inflation Reduction Act, and there's another one with the college debt and all that stuff. So Larry, CPA, Hampton Roads area, thank you so much for sacrificing your time, my brother.
No, I appreciate you having me. Yeah, Larry Pendleton, senior partner of PC Financial Services. Our goal is to help people achieve financial freedom through real estate investing and tax planning. So we primarily work with real estate investors, flippers, wholesalers, property owners, syndicators, so forth, and across the gamut. So we
Wow,
look forward to adding value where we can.
that's a lot. So what you got for us today, brother Larry? On this, let's start with the Inflation Reduction Act, which I'm like, how can you reduce inflation if you're printing money? I don't even know how that works.
So that was passed, and the reason I say is, I mean, I know there's been a lot of YouTube, TikTok videos about it, and there's a lot of good information people can go out, and we don't want to. I don't
You're
want to
the
go.
expert. I don't want to take my tax advice from TikTok. You are the research. I keep telling people I am the research when it comes to real estate. I am the research.
So there's, I mean, so the Inflation Reduction Act itself. I mean, it's not so much as like a tax law. It's just more tax implications to it. So when you're kind of reviewing this stuff, it's a lot of it could just be fluff. A lot of it could apply to you. A lot of it can't. So it does go through a lot of just lowering costs of prescription drugs, healthcare, energy costs. There's a few things about um, energy credits in there. So as a real estate investor, depending on if you're going, of course, if it's your personal home and you're trying to invest into certain appliances, windows, solar energy, stuff like that, where like you have opportunity to get credits there. But there's also the big thing that a lot of us really got from it is the what was it 85, 87 like billions of dollars that's going into the IRS. And I'm not sure I forget when the recording started how much we really kind of got into it is that there's a lot of money spent into these programs, and part of the politics of it is that how do you then um, uh, claim to the other side of the table, like, hey, we can make this money back up if we do this. And they decided to go with the reinvesting more into the IRS. And what that most likely will lead into is more IRS letters, more IRS audits.
Mm-hmm.
So that's kind of the big thing there that a lot of us in the tax world kind of like pointing our eyes to because we knew at some point with everything that's been going on, even with the 2017 tax changes with Trump. Like, I don't really care which side of the table you on. It's just it is what it is. And then all the cares, because there's a lot of benefits that came out of those tax changes, and then all of the money that the government was been kind of putting out here over the past few years to kind of help with the pandemic, and everything. There's like, okay, how are they going to recoup this money? And this is how they decided to do it, is by reinforcing the IRS. It has its benefits in a funny way, because tax returns are backed up. There are delays with people's refunds, and just people just getting filing with tax returns. I know I have issues with people who haven't gotten their refund in over a year.
Wow.
And this is like I like calling them, and it's like they just kind of go at their own pace, and wherever you get on the call, they ain't gonna be able to do but so much, but to tell you it's still processing.
Yeah.
From there. So
That's gotta be something.
it has its benefits on getting that segment of like the IRS kind of up and going, but like it does, once they're going to be kind of have more eyes in place to kind of regulate where people may be cheating the system at, or just making sure people are crossing their T's and dotting their I's.
So do you, as an accountant, go in and go through all the moving parts on this inflation thing to see what's pro con, or how does it work for you being in your profession?
Yeah, you try to go through and like, hey, okay, which of this stuff does have a the necessary like tax implication. A lot of it is just like I said, part of it is like, okay, reducing prescription drug costs.
Let's stay there for a minute. So I'm just saying, just for instance, if I'm just thinking about, let's say that drug, that's a product, right?
Mm-hmm.
So for me, a house is my product, right? That's my product. I mean, is that just because it's big business? Because I'm thinking, what if they say, well, Chris, you can't sell this house for $300,000. You can only sell it for $250,000. I'm just like, that's cutting into free enterprise on that.
Yeah, so that's where you kind of get into the pros and cons. Where like, okay, great, like people can afford to get their prescriptions, and we all want that. Now has that particular industry with prescription medication has kind of gone completely off the rails. Some people may say yes, whereas like, okay,
Gotcha.
they're making profits like crazy on that side. But to your point, you're still now dabbling into free enterprise, where like they have a product people need. Like that's capitalism.
Wow.
In the grand scheme of things, now the government's trying to control it, because like we still have to help the people. We can't go past helping the people over just profits at that point.
No doubt.
Unless someone else comes up with a newer product cheap at that point. So that's where like it's one of those things like, okay, they can reduce it, but then how does the negative side, how does that affect the quality of anything that the government is now saying that you have to
regulate,
reduce your costs or regulate the costs? Think of it,
wow.
Subsidized housing or control rents. Like how much quality is those landlords in those states and cities that have rent control, or even for property owners that are trying to go for low income housing credits? Like how much quality are you really putting into this, where like your margins are now kind of slashed?
Yeah,
Like
the margins.
there's a way to do it, and there's experts in those fields to provide a moderate to high quality while still qualifying for these certain things. But how like at some point they all kind of spreads thin, where it's a lot of stress with all this stuff. Like people have to be profitable in a certain way that makes sense to them.
I struggle with that, Larry. I probably never told you. I struggle with the pros and cons. And my brain is like capitalist over here, socialism over here, right? And I thought I was like all capitalist. Then I kind of peel back the layers, and you look at people with the power. It really is in the people. We hold the power, right? So and even when I was looking back, even with slavery times, like the capital or the thing that made the whole economy work was the people, and the land. The land had value, but the land is just an acre unless you have people to work it, So I'm thinking about just capitalistic part where I could earn as much as I want to, free enterprise, all that, and then the social part, like we should all look out for each other. How in the world did they bring all this stuff together, brother?
I mean, like I say, as you start talking about like
That's
balancing,
outside of your stuff. You just
yeah,
know.
like the politics of it is like man, it's tough. Like I say, it's I say yeah, like I don't really kind of dive into it.
I get you.
I'm more into the capitalist side of things, but I personally, I guess I'll just kind of speaking from personal experience where you can have a capitalist society, um, or capitalism or government, but how you operate individually may be more kind of
I got you.
socialist from that
I got
standpoint.
you. Got you.
Where you may be you're taking care of elderly and all of that. So what you make, you're passing that on to them. That's kind of a bit of socialism from that standpoint there, but that's internally what I'm choosing to do. I think when people are losing that choice to do, I think that's where the backlash is coming from. But we all kind of operate in that way if you're taking care of anyone or basically anyone, kids, grandparents, people who are disabled or unable to care or fend for themselves from that standpoint there.
Gotcha. All right. So, are we? You done with the? I have been seeing the Inflation Reduction Act. I don't know how. In my mind, I'm like, how are you doing this when you're still printing money? So it didn't add up to me. Anything else you want to cover on that one?
I mean, yeah, like the whole aspect of them still printing out money, especially when you have countries like um, China and Russia who have just been investing into minerals like I've been aware of it. Someone that sent me a video article of it, but it was like it's been going on for quite some time. But it's like okay, we're having to compete with those who are now trying to back their currency up with actual tangible assets.
That's the scary part.
Where the U.S. is like the dollar itself, I mean, is all this kind of been, for lack of a better term, faith based.
Well, I think we're still based on oil. When I was doing some research recently about the oil is still purchased in the American dollar. That still keeps us in power. I don't see how. Other than that, I don't know why.
Part of it is that the U.S. dollar is almost like the world like reserve currency from that standpoint.
Yeah.
Now, if you have, I guess, mega powers or whatever, that's the proper term. Let's just call for this Russia and China that's going to challenge that. And
we'll be in trouble, man.
We're actually backing it up with this. Do you want to then move your reserves away from the U.S. dollar to what we have? That that if we're actually are still going to be drilling now. Like now you're talking about whole.
We'd be in trouble.
Yeah, well, not economy, but the whole like the nature, like how the earth wellness of it. From that standpoint, we're having the countries are still drilling for minerals to now back their dollar. So,
deep stuff.
Whole another
deep stuff, man.
It's like string of things, but like I say, it's just it's interesting to kind of keep tabs of it, and it's a lot to go on where it can be overwhelming for just one individual to kind of keep up with. As I'm always a big proponent of just having teams and consultants and advisors who are looking at areas that they're particularly your blind spot, because you can only observe and really kind of take in but so much at one time.
So what type of implications are we dealing with when it comes to the college debt elimination? Is that, I didn't know they had any tax implications. I thought they just wiped the debt away.
So typically in a normal situation, anytime you got forgiveness of debt, the government consider that as income.
Forgiveness of debt instead of income.
Yeah, that means you were supposed to pay it back. So let's just hypothetically say that you took out a HELOC and you used that money to buy a property. Like that money you receive isn't taxable because it's debt. Now, if your lender ever decides like, hey, well, we're going to forgive it, they're going to issue you a 1099-C of that forgiveness of debt, and then that goes as taxable income. But technically, that debt has then now been converted into income that you receive, because they're writing it off on their end as a as bad debt.
Mm.
So with the benefit of the student loan forgiveness, whether it's the $10,000 or the $20,000, is that they also put the disclaimer that on the federal basis, like it's tax free.
Mm-hmm.
Now, what people have to be mindful of is that not all states follow exactly what the government does.
Mm.
For example, a lot of people are buying real estate for bonus depreciation. Virginia is actually one of the states that don't allow bonus depreciation. So
Then
even
what's bones appreciation there?
so bonus depreciation is basically the recouping of the building value of the property over a certain period of time. So you pay $100,000 for a property. Let's just say 20% of it is considered land value per the city records. You're now have an $80,000 depreciable basis on your property that you will then take a portion of that over a certain period of time. A lot of times it's considered a non-cash expense because you're most likely using OPM or using debt to buy that property. So you're able to now claim this deduction. And you didn't pay any money out for it. Sometimes phantom expenses.
Gotcha.
Some call it a ghost expense because it's kind of it just doesn't just come out of nowhere.
Yeah, I got it. I got it.
So that's kind of one example where like you have states that don't follow what the government actually allows. States have that option. So of course people know there are states that don't have state income tax, like Florida, Wyoming, Texas are kind of the big known one, the big ones that are known for there. But it still hasn't been fully it's not fully on paper yet that because there's 13 states that typically tax loan forgiveness. Virginia is actually one of those as well. Arkansas, Hawaii, Idaho, Kentucky, Massachusetts, Minnesota, Mississippi, or some others. I know I didn't name all 13, but so whatever state that you're in, you need to know whether or not they are forgiving the that loan forgiveness as well, because once again you may not be taxed on it for the perspective, but then you may have to show that as taxable income on your state tax return.
So it's not you don't have to pay federal taxes on it out there.
You don't have to pay federal taxes on this new loan forgiveness that the government is allowing.
Sweet, I didn't know that. I was thinking, okay, well y'all heard that from the CPA, so it was 10 grand. Man, that ain't bad.
Yeah, so it's just watch out for your state. Your state may still be taxing it, so it's just be mindful of that there.
Being mindful. I didn't know that. Is that the same thing for the CARES Act too? There, when that CARES Act thing, because I know they had allowed us to take and borrow against our IRAs for a certain amount of time with no federal penalties, but it could be state too.
Yeah, that could be state as well. Your state. It's just whether or not you're having to, because part of that for 2020 was that either you're going to take it in thirds and pay taxes on thirds, or which you still can amend and pay it all back after that 3-year period and get your money back if you have returned all the money into your retirement account.
Gotcha.
Actually seeing, like me personally, like a lot of most people like me was like that was a reason to get my money out of there without the penalty, and I'll deal with the additional taxes. But I feel I could have done better putting that money into, once again, tangible assets.
There you go.
And like I say, it's worked out well for us. We're like, okay, getting some bad debt paid off, acquiring more properties, and of course there was always income limits to that. So that was my approach with it, and others kind of felt the same way.
Absolutely. I'm so glad you said that, man. All right. Anything else you want to drop on us on these new laws, Larry, that's going to have some type of effect on us entrepreneurs, real estate investors, or even some of our W-2 earners?
Those are two main things. Like I said, if you haven't been getting your documentation together before, like, is even more pertinent now. I'm not saying that the IRS is going to kick your door down and come arrest you for anything. I'm not saying that. It's just that if the IRS letter does come asking for supporting documentation for or something that you need to verify in your tax return, you want to be ready. You don't want to be having to just been gathering that information, because that goes into whether or not they deem you to be credible or not, from that
Yeah.
perspective.
I'm telling you, man, I keep everything. Everything. I've been audited twice, so I'm like, I know, especially those W-9s. I don't pay nobody without a W-9. You want to check for me? You're going to fill out a W-9. That's all.
And that's a huge adjusting period for a lot of investors. As you know, man, a lot of people are like, hey, I'm just gonna go on Depot. I'm just gonna find some guy and pay him a few dollars, and it's like, okay, like, but as your business grows, like, those payments become larger, and you may have to upgrade from someone who doesn't want to be 1099 for someone who doesn't mind, but they may cost more. But there's like, okay, how do you want these deductions on your
Yeah,
on
all
your
right.
tax return or not?
There you
Um,
go.
because you're gonna have to explain whether, like, if you
Where
did
that
all the
money
work
go?
yourself, or like you said you pay contractors, whereas the 1099s, if you're especially paying anyone over $600
That's
uh,
right.
during the given year.
Mm-hmm. Great. That's right. Tax don't forgive me. Okay, brother Larry, it was good talking to you. Real estate tax time, tax talk, and we'll definitely get you next week. So if anybody has any questions, or if you guys want to, just make sure you comment in the video below so we can know what you'd like to know from Larry's CPA. He does this every day. Real estate is his specialty. Dealing with do you help people with 1031 exchanges too, Larry?
Yes, we help consult with that. Was actually working with a lady in New York on determining whether or not she should or shouldn't. But
Maybe
like I
do a
said,
case study on that or something.
yeah, like I said, I can't be a 1031 custodian for my clients, but I can help consult people and determine uh, what the valuations they need to be looking for in the new properties that they purchase, and whether or not it's even worth doing it.
Yeah.
Because sometimes you can find another way to um, acquire the next property or sell your property and not have to pay any taxes on it, depending on your full tax ecosystem, as I like to call it.
Tax ecosystem. I know my joint is just, oh god, man.
And one affects the other. Like, I mean, it's never one thing where, like, if you're only doing this, that's not going to affect all the other components of your tax return. Like, it's all going to tie in, and you actually want that to happen for your benefit, because you want something to be able to write off something else.
Hmm. Okay, round up. Make sure you hit that thumbs up, subscribe to the channel, and share with anybody else that needs to get this tax information. Entrepreneurs, real estate people, you gotta know. Just because the government said they're gonna give you a break on these tax return on those student loans, you may have an income tax for your state. I had no idea. I'm glad Larry brought that up for us today.
Yeah, like I said, I'm happy to add value where I can. So, like I said, I'm happy to hear any. I got a laundry list of stuff. Chris rings me in on making it sexy, so I'll try to do that.
If people wants to hire you, Larry, do a consultation with you, how do they get in touch with you, my friend?
Yeah, they can scan the QR code that's over my left shoulder here. I think that's where you all are seeing it at. I'm
Yep.
pretty sure Chris will have the link to my page in the show notes, where you can just kind of learn more about me and book a meeting. And yeah, definitely can reconnect from there.
Nick says if properties are in his own name, makes my stomach hurt, Nick, but that's okay. At least you got properties. I'm going to burn them, buy, renovate, refinance, repeat. If I pay contractors to put the LVP floor in, is that tax deductible or not?
It's
If it
it's
makes
tax
it
it's tax
livable.
it's tax deductible. Um, I'm guessing the question. Correct me if I'm wrong, Nick. The question is whether or not you want to, if you have to 1099 them. It all kind of depends on how much you're paying them. Like if you only pay them $400, depending on how much flooring is put down, then it's less than 600. You're not required to issue them a 1099. Now, if it costs you 1,000, then yeah, you have to issue that person a 1099. You can still write off the materials, of course, but you would then have to go through, get a W-9, get that person to fill out and sign it, and then by January 31st of the following year, get the 1099 out to them. Now you can still put the deduction on your tax return. I'm not advising this whatsoever. You can still put the deduction on your tax return, just whether or not, if you are audited, they're going to want to see that you issue that out. And there could be penalties, or there will be penalties if they happen to come across and say you did not issue out your 1099s for the contractors that you use.
Man, Nick said he paid 1,500.
Yeah. So that would be now is that material? Okay, you paid him 1,500.
Yeah, that's labor.
So that's just the labor. Okay, so
Nick,
yeah,
you better get. Let me tell you this. No, he's licensed and all this stuff, so he can't really go hard. I'm not licensed. You can't come take no license from me, and this is information purposes only. You besters, you better. Is that how else can I say it? You
ought to.
You ought to. No, man, if you do not get these W-9 signed, let me tell you how this thing works. When you sit down in front of the agent, right, they're gonna say, "Well, look, we got here. You made 100,000," and then you say, "Well, darn, I paid Billy Bob 80 of it," and they're gonna say, "Okay, prove it." You bring your check in. They say, "Well, I wrote him the check right there." They're gonna say, "Okay, how do we know you wrote him the check and he just didn't give you the cash back? How do we know?" That's why you got to have these gosh darn W-9s. That way it gets reported right to the IRS. You don't have to prove. Ain't nothing to prove. It's right there on the 1099. I remember when I got audited the first time, I'm like, you know what? Never again. I will not write another check unless I have a W-9, Larry. It's just like a company policy for me.
Yeah. I
I'm
mean,
not doing this.
The main thing, also keep in mind that the IRS wants business owners to operate like a big business. Like you go to any corporate company, a new vendor comes to them.
Off the top,
one of the things they're required to issue out is a W-9 to that vendor. Like no matter if it's just cutting the grass, cleaning the office, whatever. Like they're issuing they're issuing.
Period. Matter of fact, you can't even start working until you fill that paperwork out, right? On work from employers.
Well, I think that's more of an I-9 type of thing. Now, if they're subcontracting you, then yeah, you're not gonna be able to start any work with them.
I got you. Yeah, I see you.
But not for employees.
You're right.
Yeah, I think that's more of an I-9.
You're right. I'm sorry. But they're still filling out a tax document.
Yeah, there's still some type of tax document being filled out.
What up, C. Rose? Good to see you, my friend. One of my channel members. Thank you so much for making this possible, my friend. Nick, sounds like you need to get. Sounds like the W-9 is the way to go. Let Larry say it. You're the CPA.
So, because here's another thing people say, like people have done, like man, it's already December. I got this work done in May. I've been trying to get this guy a W-9 this whole time. He's ghosted me. And now, like, can I still issue out a 1099? His employer identification number or his social security number? The answer is yes. You can still issue that out, and you want to create that paper trail of like, hey, I've done everything I can to get this contractor's information. All I have is his business name. You may even have an address. Like, and you can, like, I tell people, like, you set the email chain, like, hey, I'm trying to reach out to you. I'm still going to issue out this 1099 to you, even though you haven't filled out the W-9, because it's not the W-9 that you fill that you report. It's the 1099. The W-9 is to get the business information and the EIN or the social security number from the guy you're doing the work for. or doing the work for you.
Yep.
From there, and then you have that as your record, so that when the year turns around, you're not having to hunt somebody down for that information. You already have it. You know how much you paid them, of course, and you just fill out the 1099s with that. So if you don't have the EIN, you can still issue out a 1099 to them, get that filed with the IRS, and I'm not saying the ball is completely off your court, but you did everything that you reasonably can to make sure you're in compliance.
There you go.
So that could be, like I say, you can literally be like at like $50, $250 penalty per 1099. You're supposed to have issue, if not more. I forgot the exact numbers, but like, the penalty.
Don't do it. Don't do it, y'all. Just make it and it's a muscle. It's just like any other business. It's a muscle exercising, issuing those W-9s. Because before I messed up too. Damn, I paid the guy, I forgot to get it. So now every time, Larry, whenever I pay somebody, this is exactly how I do it. I can pay check right here. $1,000, right? I just roll it. So, hey man, you ready for a check? Name, social security number. Okay, boom, sign right there. You get your check. It's over.
Yeah.
Don't worry about it.
Fortunately, a lot of the contractors I work with are either actual clients or people I consult, so I'll eventually end up getting their social security anyway.
Well, you don't count. You.
I mean, I still got issues. Like I said, even like all my assistants, like I don't do the overseas virtual assistant. That's just personal choice. I don't have an issue with people that do. It's just I want to support people here. And they know they got a 1099 coming their way. So it's like I said, even for my assistants, my data entry people, all the same from that standpoint. Anyone that's doing work for you on a business standpoint, not personal, just from a business standpoint, you're required to issue a 1099 if you're paying out a certain amount.
You better do it, y'all. You're gonna be sorry, because you're gonna be like, man, I paid the dude 10 grand, whatever, and they're gonna be like, how do we know he didn't give you the cash back? Just because you wrote somebody a check does not mean you paid them. Let me repeat that. Just because you wrote somebody, it could sound overwhelming, because I've been audited already trying to prove this stuff. That's why I know, like, these W-9s, them joints is gold. Like, look, I didn't get that money, boom, but W-9, it's over. Then they can go after them. So it's all they're doing, like Larry says, just following the paper trail. Where'd it come from? Where'd it go? That's it. If you can't prove it, all income. Woo.
Yeah, I have a client in Philly where they had, and this is before he brought me on, but like they disregarded all his business expenses for 3-4 years, and
credit card charges too, or checks written.
Credit card charges, everything. They disregarded all his expenses, and and because even though logically it doesn't make sense, because every business has some type of expense,
no doubt.
So like him having to go through a process of like getting a bookkeeper, like, because I don't do bookkeeping, like, okay, basically what we call it the dirty accounting, where you're just kind of drilling through all of your receipts, all your bank statements, because I mean, a lot of times you may not have it, and the bank may not have it that far back.
Yeah.
So it's depending how far you're going back, like I said, and it's like, so all to your point, it's all income, even though you have, like I say, we're talking about not just contract, we're talking about meals, you're talking about mileage, you're talking about materials, you're talking about insurance, stuff like that. Whereas like, unless it's like just kind of something that's blatantly on a IRS document, and sometimes insurance isn't. Sometimes it is on the 1098, sometimes it's not. People just assume that it's up there. Like, no, most time it's just your interest. We got to go pull your taxes and insurance and make sure we got the right information up there.
And HOA, I mean,
HOAs, all that. So he was like, I mean, he was obviously like pissed off. I mean, I would have been just gonna sit here and say that I got to report like $80,000 of straight income, whereas like I didn't see $80,000.
Real quick, I'll let you go, Larry. Monica, one of our members, thank you so much, Monica. Marvel, hey, look at that beautiful picture. Hey, awesome information with VAs. for the Philippines. Excuse me, Philippines. How do you handle them?
Now, most times, like most people are using VAs
through a site,
right? So it wouldn't really account for that. And most of those sites are S corps. I guess that's another thing to really kind of specify. So if the person that's doing the work for you is an individual or just an LLC, like then there's potential requirements for a 1099. If they are a S corp or a C corp, you're not required. Primarily because they have payroll requirements that they have to follow. So the government really isn't too stressed on them reporting all their income, because like if you have to pay yourself a salary, you have to have distribution. You already have your own separate tax, like with the C corps have your own separate tax rate. So you're going to report all your income to actually justify the salaries and distributions that's being made from the company.
Gotcha.
A lot of LLCs and sole proprietors aren't doing that there, but most time most VAs are going through some type of like company.
So middleman.
So you're
we're
not
paying with a credit card.
There's a middleman involved. You're directly working with that person in the Philippines. Also, you're not really having to press on getting a 1099 to them.
Yeah, that's how we do. So yeah, don't let the website deal with all that. Yep. Okay, brother Larry, how do people get in touch with you one more time and you're gone?
Oh, QR code above. Check the show notes there. Happy to connect. From that standpoint there, I'm on Facebook, I'm on Instagram, I'm on Facebook. Larry Pendleton CPA is basically all of them. I try to change all of them to be straight line like that. So yeah. Happy to add value, connect with whoever, and build from here.
Thank you. All right, Roundup homies, good to see you. I'll see you on the next video. Peace.